Reserve Chair Jerome Powell says the government will raise interest rates this month in an effort to curb rising inflation. In testimony before a congressional committee, Powell told lawmakers he supports a quarter-point increase in March, which would mark the first interest rate hike since 2018. It comes as U.S. inflation reaches its highest point in 4 decades. During his testimony, Powell noted the economic impact of the Russian invasion of Ukraine is, quote, highly uncertain. Here is part of what he said.
The ongoing war, with sanctions, and of events yet to come remain highly uncertain. Making appropriate monetary policy in this environment requires a recognition that the economy evolves in unexpected ways. We will need to be nimble in responding to incoming data.
Joining me now is CBS News reporter Sarah Ewall-Wice. So, Sarah, we all knew this was coming. The Fed didn't really keep it a secret, and here we are today. So what can we expect them to do moving forward, and how do you think it's going to impact the average American?
You know, when you raise the interest rate at the Fed, typically other interest rates go up. So what we'll be seeing when they go to move it up a quarter percentage point in that meeting coming up in about 2 weeks is you'll see borrowing costs for Americans going up. That includes certain mortgages, that includes auto loans, that includes certain credit cards. So we will see those go up across the board as they do this. With that said, though, the whole idea of raising interest rates is to put downward pressure on inflation. And so that is the goal across the board. We know inflation is up 7.5% over the past year, and that has hit Americans across the board hard, in particular low-income Americans. But something that is interesting to keep in mind today is we knew this was coming, and it actually, as he said it today, that he supports the quarter percentage rate increase. We saw stock markets up today. And usually when they announce interest rate hikes, the stock market actually drops. But the thing is there was questions as to whether they would raise the interest rate more than a quarter of a percentage point. Some economists I have spoken to have called for raising it half a percentage point. And, you know, Powell did leave the door open to increasing the hikes in the future. So we'll see a quarter percentage at this coming meeting. He didn't rule out a half a percentage point at future meetings. But he also said that they anticipate making it an incremental increase at multiple meetings consecutively moving forward. So that is a lot of decision making still to be made on that front. But less of a hike than some had anticipated as we go to raise rates this coming month.
And we also just heard from Powell about one big unknown and something that I think a lot of people are anxious about, and that is how Russia's invasion of Ukraine could factor into the U.S. economy, especially given the fact that the president himself has warned on multiple occasions that what is happening there will likely have a cost here at home. So yeah, what should people expect?
You know, I think we're already seeing it. Energy prices are going up amid the uncertainty over what's happening in Ukraine. Obviously, we've seen crude oil. Oil is up over $110 a barrel. Gas prices are up $3.65. On average across the country, up about 10 cents from last week alone, right as the invasion started to happen. So we are seeing it in terms of energy prices. Keep in mind, Russia is a huge exporter of energy. And as the United States and allies have gone to implement these sanctions to really hit Russia in terms of financial pain because of its invasion, there have been carve-outs specifically because of the energy. But separate from that, the United States is not a big trade partner with Russia. So a lot of this will be an indirect impact here, but it is something that the Federal Reserve is obviously keeping an eye on because there is so much uncertainty about where this crisis is headed and what it means both abroad and here in the United States.
And there's already so much uncertainty because we're trying to bounce back from the current rising prices after the pandemic unfolded and really put a wrench into all of the supply and demand around the world. Last night, we heard President Biden tackle that head on. He tried to tell the American people, look, I get it, and I plan to help you, but we didn't get many details about how he can actually combat inflation, aside from pushing legislation that we've already seen fail. So what can he do?
You know what? This is one of those interesting things where it needs to look like the White House and the Biden administration is doing something on inflation. But when you talk to people who are dealing with these prices and tackling inflation, they do point out that the real purview on the near-term solution to ease inflation does reside at the Fed with these hike increases. We do see the president talking about things like making more products in the United States, becoming less reliant on supply chains, foreign supply chains. And those are things that will help specifically with the supply issues that we're having as we come out of this pandemic. There's been a ton of bottlenecks. So while the Fed deals with the demand by pushing downward pressure on demand with rate hikes, that is a more immediate impact on inflation. The White House and the Biden administration really can do things that are more long-term, medium to long-term, and those are the things that he talked about last night in terms of the supply chain, making goods in America, but then also other things that he's talked about, such as you referenced, that'll help ease prices for Americans, things like childcare, healthcare. Those are really hung up in the House and Senate right now, more so in the Senate, really. And so that is something that maybe that could be another long-term solution to help ease prices, but it's kind of hit a wall as of now. So that's not something that we really can anticipate at this point in time.
All right, Sarah Ewall-Wice, thank you so much for your reporting, as always.
Thank you.